No. Well, hello everybody. Welcome back to another episode of the Pickers Market
What number are we
podcast.
on?
76. Can you
Wow.
believe?
I can't believe.
It's the three musketeers today.
It is.
Keith, Kyle, and Lisa.
Perfect.
So yeah, let's jump right in. Two truths and a lie. I thought
What?
I bring you a little gold edition today. We talk a
Mm.
little bit about glitter and gold because gold is doing exceptionally well this year. Not
Really?
only this
I
year.
didn't notice. What? How much is gold up this year, Lisa? Roughly.
Over 50% now.
Are you trying to eke out one of the two truths and a lie?
No.
Yeah.
Oh, okay. All right.
I haven't read them.
Anyways, I put a lot of effort in it, so I hope there was no cheating involved.
Kyle.
I know. Yeah. I threatened it, but I didn't do it.
So let's start. Two truths and a lie. You tell me what the lie is. So A, all the gold ever mined could fit inside only about 3 Olympic-sized swimming pools.
Wow, I like that. I don't know if it's true or not, but I like that.
B, the majority of gold mined each year comes from South Africa. Or C, the Washington Agreement of 1999 was designed to limit central bank gold sales after prices collapsed to around $250 an ounce.
Just for the
$250 an ounce
just
back
for
then.
listeners.
What do we have? What do we
viewing
have
pleasure.
today?
In 99, that wasn't even that long
What do we
ago.
have today?
That's over 4,000, right?
It's crazy, yeah.
Wow.
So let's start with Keith.
Oh no!
Keith is eager to answer. I can see that.
I love it.
Gold is really not. That's more your forte. So gold. I mean, I love this question because I'm not going to get it right though.
That's the plan.
All gold. That 3 Olympic size pool. That seems shockingly small, but I'm going to say that's going to be true just because I can't believe you'd throw out something like that. That wasn't true. The majority of gold mined each year comes from South Africa. I would think that's supposedly true, but I'm going to say that's going to be the false one just because I think that's the most obvious, at least from me, not being the gold guru that you are. And the Washington Agreement of 99, yeah, that sounds reasonable. I don't know. It seems 250. So we had some kind of thing of worried about gold collapsing. So doesn't surprise me we'd have some kind of strange agreement about that. So that's my logic on those three.
So B's the lie.
B's the lie, yeah.
Okay. Kyle, your thoughts?
I'm going to say A totally seems like it could be a fun factoid.
Isn't it?
It seems like it could be correct. I don't know why you need Fort Knox then. There's no gold in there anyway, though.
Good point. That's another episode.
That's another episode to discuss.
Let's see.
What was
here.
that stat? Speaking of Fort Knox, didn't you? What gold prices going up, or what was that? I thought you sent some stat about.
I think
Fort
someone
Knox.
Probably
sent something out about that. Yeah,
I think it was Lisa.
I guess we'll get to that in episode 2.
I'm gonna go with C is not correct.
Okay, so we have B and C. Actually, the lie is B.
Oh, nice.
The majority of gold mined each year comes from China.
Oh, what? Really? Oh,
yeah.
I wouldn't guess that either.
No.
And the Washington Agreement is actually true, and it was installed because especially European countries sold off of gold reserves because of the introduction of the euro. Yeah, so
that makes sense.
That kind of put a kibosh
down to 250. That probably was a pretty good buying opportunity.
Yeah, it was.
Yeah, compared to today, it was like, that would have been great. Anyways, let's talk a little bit more about that topic because gold is crushing it, as we said, performance-wise, up over 50% this year. And
that's crazy.
Yeah, and not only this year, it also did well in 2024 and 2023. So it hits the first time new all-time high $4,000 per ounce yesterday. It's even higher today. So it's crazy. It's outperforming basically everything else. S&P, outperforming Bitcoin, outperforming international developed markets. So it's really, gold is having golden times.
Do you think of going into this year that many people were predicted that, 3/4 of the year that gold's been the rock star?
No,
I wouldn't have. How about you, Lisa?
I think we had that on a Pickers Market podcast earlier this year. I think it was beginning of summer, and gold was doing great,
Well, yeah.
and we had some issues here around trade in April, and it was a little bit after that, and then we kind of walked in the circle, like, who do we think is gold continuing to do well or not? And
Let me guess. You're
and
the
I
only one that said
remember I was the only one with the
Of
opinion that
course.
said yes.
Oh yeah, it's gonna be amazing.
we should maybe.
I just wanted to mention that at this point.
Surprised we don't have like an episode drop of your commentary from
Right,
back then
yeah.
saying.
How come you're not hitting the air horn over
Yeah.
here?
Yeah. I don't know which button it
claps.
is,
Oh. Yeah,
unfortunately.
We'll have to
So
figure those out.
I do not want to
Mhm.
scare our listeners away by doing weird noises here. So
Mm.
I figured it out until next time and give myself a clap. So anyway, it's outperforming still. And given that gold is usually, the hedge against uncertainty, and we haven't had too less about that. We still face that. Do you think, and especially given like compared to past US crisis, right? When there's crisis, even more increased gold. But it is the strongest outperformance since the inflation scare in 1979.
Wow.
So all crises after that, which is a dot-com bubble, which is a great financial crisis, gold did not perform so well as it does now. So are we missing anything here, or what's going on? Keith, I'll start with you.
Yeah, I've been getting, dating myself, doing this for 30 years. This surprises me. I don't, it's whether it's an inflation hedge, store value, a fear trade, just the sheer outperformance. I mean, you can sprinkle a little bit of reason for all those why it's up, but to say it's up 50% after back-to-back good years, and to your stat of going back to 1979, that's a long time.
Exactly.
Again,
And
that's even before me.
Yeah.
So.
And we had a lot of uncertainties since then, and crisis and all of that. So that stat actually.
Yeah, that one shocked me.
surprised
And
me.
then, I'm sure we'll get to it a little later, the Bitcoin argument versus gold. And I think Bitcoin, your stat is only up like 30%. So having gold almost 2x that number, and gold's a physical commodity. So
it is conservative, it doesn't
Yeah,
move
and
as
I
quick,
mean-
and then compared to Bitcoin, it's
just from my thought process on gold, it's we'll get to it again too here a little later. Is generally it's decent own small position, and I'm more of the Warren Buffett camp though. Of I think gold's a non-productive not saying anything about the performance of, but it doesn't produce earnings, it doesn't produce cash flow, it doesn't produce income. Whereas Warren Buffett he'd rather invest in U.S. companies, stock market, just because it does those things. So I'm a little bit more of his, camp of thinking. So it really surprises me that the outperforming. Again, I get why it's performing well, but the magnitude of this performance has really got me surprised. And Kyle can touch on maybe some of the reasons why he thinks it's doing so well and contributing to it. I think we touched on it a little bit.
Yeah. Kyle, what do you think?
Yeah, I mean, there's a lot going on there. I've seen a ton of articles, a lot of different thought pieces on socials, and I think fear is definitely a part of it.
But is it more fear than it was in the dot-com bubble and in the great financial crisis?
I think the difference when I say fear, to be articulate about it, I would say it's more central bank oriented. I mean, you think about all the commentary earlier this year. You've got Lisa Cook and the Fed. You've got independence. Potentially a lingering question. You look at like the dollar-denominated regime that has been firmly in place since World War II. Prior to the First World War, it was really a regime of the British pound, and that was hundreds of years. And then before that, you had the Dutch East Indies, right? There's like the, so whether it's a regime change or like people sniffing out like a change, I don't know what it is, but when I say fear, I don't necessarily mean people are afraid of an AI bubble. That definitely, there's a confluence of different kind of fears overlapping. I think one is the central bank kind of stuff. One is the AI stuff. And then I think just the market that we're in, it's just unusual. Everything's extremely expensive. People are trying to hedge a little bit. So I think all of those things come together. So I don't know exactly, but I'm in Keith's or Uncle Warren's camp. Doesn't produce earnings or cash flows. but on the counter, it's a finite commodity.
Yeah.
So, I mean, if you've got, it's just like economics 101, like supply and demand, if tons of people are demanding it, the price is going to go up. So,
Lisa, since you're our precious metal portfolio manager, you're into the weeds and the stuff. What are your thoughts on kind of some of the things causing the outperformance?
I mean, I think Kyle summarized it well. It's, I think, a mix of things that come together, and a lot has to do with uncertainty. Obviously, I mean, we had a lot about that already this year. We still, add on to it rather than take away. Other things, get easier with tariffs. That's a little bit on the back burner, but it's still there. Then we have now the government shutdown, right? Fiscal stuff is coming back. Then to Kyle's point, and I was on TV earlier this morning, and that was a topic there as well, like the AI bubble, and is like the outperformance of gold also maybe a hedge against a potential AI bubble. And that's a good point, right? People want to diversify, and gold is a typical diversifier in a portfolio of an investor. And I think it's a mix of things, not one specific one. Economic stuff, right? We have a weakening labor market. We have inflation still not under control. So I think it's a little bit all of that. Also, and that's more the traditional thought process about gold and what can be tailwinds is a weakening US dollar. We saw that again resurfaced over the last couple of days, even more than we see, which is usually conducive for gold. Then on the other side, we have interest rates coming down, and thinking of we kind of Fed keeps on cutting rates rather than something else. That is also a tailwind for gold, right? Because we said that already. It doesn't produce any yield, so the competition gets a little bit lower compared to other asset classes, even though interest rates are still higher. So I think it's a mix of things, and that's why I think it can continue to do well for the time being, because I don't see that we get rid of the baseline uncertainty that we're dealing with. Good, we will resolve the government shutdown hopefully soon, right? We're on day 9, I believe. I think it's day 9.
8,
8, 9. Yeah.
When this
so
was published, maybe 10.
we are higher than the average shutdown lasts already. But there's for sure other things to come, right? There's an earnings season coming up, and valuations are stretched, right? And I think there does not need to be a lot until we maybe see some sharper market moves, which is also maybe also a tailwind for gold going forward until the end of the year.
Yeah, there's a lot of reasons for it.
Yeah.
What surprises me though is just the magnitude. I mean, so all the stuff everybody said is true.
Yeah.
It's just 50% after a couple of really good
And
years.
that's
And if you look at history, right, you get periods where gold does this. I mean, I don't know if to this extent where it massively outperforms other assets.
But not so long.
No,
and now it does it for the third year already.
Third year, but then it'll go for a decade where it's flat, slightly down. So it kind of, I'm sure we'll talk about where we think we are in that point.
Yeah. And I also think, and that's what I wanted to touch on, and Kyle mentioned that central banks, right? I mean, central banks seem to have an unstillable hunger for gold. And they are buying and snatching up everything they can get their hands on, which can also put like some kind of price floor to it, because they are not likely to sell out on that very soon. And as a matter of fact, earlier in September, gold replaced the euro as the second largest reserve asset after the dollar. So central banks are holding obviously dollar, the first largest reserve currency, and after that it was the euro, and now gold replaced it in early September. So I thought that's interesting.
Gold leapfrogged the euro. Huh?
Yep, gold leapfrogged the euro, and also when it comes to treasuries, gold also is more held than treasuries since 1996. So it crossed that mark, and I put a chart on here. Unfortunately, our listeners cannot see it, but so foreign central banks hold more gold than treasuries now. So
for the first time.
For the first time since 1996. Wow. So foreign central banks outside the U.S. So I want to ask you: has that something to do with the kind of trust erosion that we see? Right, treasuries usually that's that safe haven asset for the whole world, because gold is the reserve currency. The U.S., the largest economy in the world, the largest democracy in the world. So does that have something to do with other central banks kind of wanting to diversify a little bit and maybe not seeing the treasury as the non plus ultra anymore?
Yeah, I think that's certainly part of it.
Mhm.
It's, it's the U.S. as a reserve currency, and I think it still remain that. But I think these foreign governments are starting to hedge themselves a little bit and say, okay, well, yeah, they are the U.S. or the global currency. But that being said, we maybe need a diversification a little bit, and whether it's obviously what you didn't talk about earlier, none of us did, is maybe the tariffs.
Mhm.
The whole tariff, the impact of it's a tax. We're charging a lot of tariffs now, and it's bringing a lot of revenue into our government. But then maybe foreign governments like, wait a minute, I like the system we had in place prior to these tariffs, even though we were paying maybe tariffs on their end. Then maybe they don't like the fact that now they have to pay tariffs on our end, or somebody's paying the tariffs, whether it's U.S. consumer, importer, or exporter, right? So I think that does contribute a little bit to at least the confidence of, and then again, we're not talking this one debt ceiling, because that's another whole segment. But
Right.
I mean, we're at 37, 38 trillion. We kicked the can down for a couple
Yep.
years. I think we bumped up to almost 41, 42 before we
Yep.
hit a debt ceiling again. I think those things and AI and crypto and all the stuff. It surprises me that there's that much, the gold past the euro and the foreign central
Yeah.
banks.
Yeah.
That's a astonishing stat. So there is something going on,
Mhm.
and these are big money moves. I
Mhm.
don't think that's all individual retailers doing that.
Mhm.
So
Right.
it's just something to keep an eye on.
I have a question, I mean, that's for you, Kyle. Because when we talk about, okay, there's multiple things that flow into it why gold is outperforming so much, and it's going on for a while now, and there's maybe not one single reason for it. So what do you think needs to happen to see a major sell-off of gold, and where would it go outside of gold? So what need to happen outside of, okay, we resolve on the uncertainties, obviously, which probably is not going to happen. So what needs to happen to break that streak, and where would it go besides gold?
Yeah, that's a tough question. Keith? No, I'm kidding.
Keith, hand it over to you.
No, yeah, I think you just scroll down a little so I can see
Oh,
this
sure.
luscious chart that you have here. I think that even though the listeners or watchers can't see it, it's a chart that goes from 1970 until today, and it's basically gold holdings peak in late 70s. So when Nixon,
The Bretton Woods,
yeah, the
right?
Bretton Woods, where you get the decoupling of the US dollar from the gold, and it's basically, unwound all the way down to almost nothing. And now in the last 2 years, it's really spiked back up again. So, um, yeah, I mean, the drive into it, I would say, the likely owner is exactly what we just talked about. It's the tariffs, it's inflation, it's concern about a bubble. Uh, if you look back to, I guess, 2000 on here, during the other bubble on the chart, gold was not. There's literally no movement on there. So I'm just trying to walk through in my mind, you know, maybe a retail, buyer's mindset, or even institutional, because the amount of move in that asset's been so dramatic this year. You can definitely see it post financial crisis. There's definitely an uptick there, but it was a lagging effect. So I do wonder if part of this is just, you've touched the stove during the growth scare, recession scare in 22. Meanwhile, coincidentally, you're getting this AI bubble all at the same time. You're layering on all these things. So, to echo Keith's comments, you're probably getting a lot of retail, a lot of institutional. So to see it unwind and where it goes, I don't know what will dislodge it. Probably a resolution of, a quote unquote crisis, which, the crisis could be outlined in value, extreme valuations, very narrow market participation. But I think you could probably see a reset or a flushing out if a recession happens. I would think that would probably be the cleanest way to do it, because then you're effectively proving the holders right.
Yeah.
Right. So that would be one way to get them off the sidelines. So where it goes. it's probably back into risk assets, right? I mean, that
Mhm.
just seems like a natural thing for them to do. So, I think about money markets and other money on the sidelines. Is this a function of demand where those assets are also funneling into gold? I mean, there's a reason that money is, if you can get 3.5 to 4.5% in a money market.
What's the reason to go into gold where you get nothing?
Right. So, but are you getting nothing now? You're
Mhm.
getting definitely an inflation hedge because it's a non-correlated asset.
And we
So,
have like still interest rate cuts, right? So money market
right,
funds are getting drained pretty quickly up from now.
right. But yeah, so I don't know.
Mhm.
I think to your question of where can it go, it can go anywhere. I mean,
Mhm.
it's to Kyle covered it well there, but I think if you save for, which again, we'll see, but a lot of this I think is U.S. debt related kind of. You start
Fiscal
seeing
uncertainties and all of
you
that.
start seeing a little bit of a bend in the curve there, whether
Mhm.
it's this tariff revenue, maybe some, I don't know, increased taxes or less spending. I think even if that marginally kind of tilts a little bit to like, you know, what's the difference between 36 trillion and 30 trillion and 41 trillion? But if you can see that slope slow,
Yeah.
I think that's where maybe the gold people are like, this isn't going to be the end of all of everything. It's hard. And I mean, the gold, I mean, you're probably going to get to some questions on, since, this seems like it's a gold segment.
It seems a gold segment
I
by
mean,
now, yeah.
it's heavy. I'll ask you guys this. Has anybody literally went and tried to go buy a physical piece of gold bars or coins or anything like that? Can you two?
I have not. I know you can get them. I mean, there was a ton of memes going around like 2 years ago,
With
or was it
Costco, right?
3? Yeah, with Costco, you
Yeah.
literally can go to
Mhm.
Costco and get like a little, little gold
Yeah. No,
Yeah.
nugget or
I
whatever.
almost did. And then
Yeah.
literally the day that they put them on their website, they sell out.
Yeah.
And it's usually not much of a premium
Yeah.
to the
Well, and if you use your Costco card, you get a discount.
yeah, that's
Yeah,
kind
and
of
you
what
get
the
cash back.
rationale
Yeah.
was. It was like,
That's awesome.
and
And
they were
cash back,
selling
yeah.
little 1 ounces. Now it's
Yeah.
that was back when they're 25, another 4,000, right? So
Yeah.
it's not.
Right.
And then the other thing that I actually did look at it, and it's like, okay, so they literally deliver it to the mail to your house. Can you
Oh,
imagine
In the
that?
really?
mail?
In the
In the
mail?
mail.
Is
So
it
it's
like
like,
insured and stuff?
It's gotta be.
It's
Yeah.
gotta be. But I was like, I'm like, that was one.
Yeah.
I was, every time I went to the again, I'm a huge Costco guy. So anytime I went to the website, it was like they were gone immediately. And then it's like, okay, do I really want to have 2, 3, 1 ounce, not bar, but
Where else do
Yeah.
you get it in the US? Like the bars
You can go to the
itself?
gold guys,
Yeah.
like the
Yeah.
retail.
Yep.
They have them.
Yeah, you can go there and stuff like that. So, but it's funny that, I mean, I think that's a good pivot to this question is where, us as investors, we haven't, went and bought a physical thing. So the question is, how much is the physical purchase of gold versus how much is maybe ETF based, which Lisa, you can touch on, the different types of ETFs that, that we look at in our
Yeah.
portfolios and why we hold those versus other gold
Yeah.
ETFs, I think would be interesting.
Yeah. I mean, to your point, you can own the physical gold bar, gold coins, or you can own an ETF, right? Which has multiple benefits, I would say, because owning the physical thing, you need to store it somewhere. And that usually comes with a cost, that comes with trust that you put in someone, that comes with added insurance and all of that. With all of that you need to protect your assets in.
Safekeeping, right? You don't want
Right.
someone
It's
busting your
not
house.
as liquid because you have to take it out, you have to bring it somewhere, you have to sell it, right? So it's not as fast, but obviously you can look at it, and for some people that is an ease of mind to have it really in their possession. And on the ETF side, it's important to say, okay, there are two different things. One ETF that trades on futures, on gold futures, and one that is backed by the physical asset, which our precious metals portfolios that we have and run at Gradient Investments is backed by ETFs that own the physical thing, whether it's platinum, palladium, silver, or gold. So that means the ETF provider has it in store. They get checked quarterly and tested randomly to kind of open their
Make sure they're not
their
lead
vaults.
bars.
Yeah, right. Their vaults and kind of get that the physical asset is still there, and that's what the price is based on. So that has multiple benefits to the client. It's the real gold, it's the real asset that the prices are based on. They do not have to take care of the storage. It's liquid. They can sell it every day. So that is just important to know when you own an ETF over the physical asset. Is it what is the ETF's priced based on, and what do you want from it, right?
Because if you hold the physical, I've talked to, I don't own it personally, and obviously you two don't either, but if you go to sell it, you usually go to a pawn shop or some gold. You're not getting the spot price of say it's 4,000. You're not getting 4,000 either. That's what people have to keep in mind. And it's
you
like
have to have
you're
a
getting
spread,
there's a discount.
The bank has its margin.
Everybody's got to take
and all of it.
take theirs,
Everyone
which
takes
is
their
different
share.
than like buying a stock or buying an ETF, right? They're liquid.
Yeah.
You pretty much know what the price is. You can get out at that price. So if you think you're gonna, get what it is, it's probably not the case. I went down this road about a year and a half ago with someone that their client had a huge, it was like as big as a typical, almost a half a garage full of silver.
Oh, really?
Oh, okay.
Bars, and they've had bars, right? Like I seen the
it's
picture
not
of
even
it.
easy if you want to sell
That's
such
crazy.
high quantities that they even take it.
That was the issue this person
once,
had. They couldn't find someone to offload this amount of silver just because of the sheer size and the weight, and it's not transportable, and it's just like,
what do you do with that?
That's where you get in a little now with gold at 4,000 doesn't take much physical, right, to actually have some high net worth, but this person couldn't find anybody to take it, and it's just like, okay, so it's store of value. It's, again, there's a lot of reasons to own it, but then when you actually want to monetize it, sell it, it's not as easy as said and done. And then you get the on the fear mongering sometime on gold, if you got to own gold, in case the world goes.
If it's war, you can buy a loaf of bread with your gold bar and stuff. That's still
what I mean. What did you say if you had a bar or a coin? What do you try to slice off a sliver for that loaf of bread or gas? Or it's hard again to get your mind wrapped around it when you start thinking about it.
I also have a fun fact. To physical gold and selling it and whatnot. In Austria, you do not pay taxes on gold.
Buying or selling?
Everything.
Oh.
So if you bought low, if you sold high,
Lisa, did you come over here with your pockets full of gold? It doesn't sound like it.
I did not.
What?
Well, now I am taxable with my world income, so it would not matter if I have one.
Maybe
if I have that over there or here, I'm I pay my taxes in the US with everything I have.
When you go back to Austria, maybe you can put a couple bars in your pocket. Probably wouldn't add a whole lot of extra weight on the plane or anything like that.
But over there it's for selling and buying, there's no taxes associated, but just with gold, which can in some countries. I don't know if other countries have that as well. I know in the US not, but that can be an added benefit for people in some
it's a
areas.
Fascinating topic, right? And we didn't even get into India and the demand for jewelry.
I mean, there's so much more we can cover on that side. So we are probably black with a topic on that too, to add on that. What I want to touch on though, still a little bit at least, because we haven't done so, is Bitcoin, and especially since the government shut down last Wednesday, Bitcoin and gold both added value. Pretty much, Bitcoin is kind of at all-time highs since August. Gold, we said, first time hitting $4,000 per ounce. So with one being a very conservative asset class, with the other one being more traditionally more volatile, more risk on, with both of them rising at the same time, I just want to talk a little bit about, because we hear over the last year more about gold is Bitcoin is the digital gold. So I want to ask you, what are the reasons now that both of them are rising? Because it's a different asset. It's not the same, right? Not with risk perspective, not what it is. So do they both have their justification?
Yeah, what Kyle mentioned earlier, I think they're both non-correlated assets, right? One's perceived as a lot more risky and volatile, which it has been. One's been around forever, gold. So I think if you're worried about all the different things the U.S. dollar, the economy, the bubbles, or whatever, I think these are certainly potential solutions.
Mhm.
Now, when we talk about these too, as an investment person and an allocator of resources, I generally think even if you want these kind of assets, I think they should be a smaller allocation.
Mhm.
Just keep that in the back of your mind. It's gold is fine. Just don't have it to be. I mean, yeah, it would have been great if it was this
Don't
year.
have a garage full.
Yeah, don't have a garage full or 100% of your portfolio. Yeah, it'd have been fun this year up 50%, but
Yeah.
all of a sudden we get in a decade where it doesn't do anything.
Exactly.
And then same with Bitcoin. It's been around quite a few years now, and obviously there's ETFs wrapped around it now, so it's certainly a lot more, in my mind,
Yeah.
more
It gets a little less volatile, it's more
risky than it used to be, right?
institutional.
Before, in the
Yeah.
old days when you bought
Yeah.
Bitcoin, I looked at it when it was $200. You actually had to have a password, and if you lost
Yep.
your password, you
You're
were
done.
you were
Yeah.
done. Literally,
Yeah.
can you imagine?
There's probably a
People
lot
with
of coins out there.
There was
Yeah.
someone that had I think it was like $50 million
Yeah.
that couldn't find their password, and they're just
Well, that's
SOL.
it.
Yep.
Yeah.
There's no IT to call. There's
Yep.
no
Yeah.
company department. Hey, say bye. Can you reset my password?
Yep.
Like, no, you're just out. And
There's
it's
no
just,
cracking it.
yeah,
Yeah.
it's crazy to think about. So I just think there are alternatives for all the stuff that's going on, and people like, okay, I need some different exposure
Yeah.
than just
Mhm.
traditional stock market versus US, whether it's Europe or emerging markets.
Can it also have something to do, and especially with Bitcoin, it's a part for gold as well. Well, we talk about the fiscal uncertainty that comes back into mind with the government shutdown now, high debt levels, but also with the independence of the Federal Reserve, which is our money watchdog basically, and Bitcoin not being controlled by anyone, by any country, by a Federal Reserve, by nothing. Is that maybe a little bit of a hedge against all the discussions that happens about Fed independence, central bank interference, debt levels, which is for gold, but even more so for Bitcoin? Or
Yeah. I mean, that's part of the original lure of
Mhm.
it, wasn't it? I mean,
For
it's
sure.
Mhm.
it's transparent,
Mhm.
accountability on the blockchain. Everything's, fully there and auditable. And there is some modicum of privacy,
Mhm.
right? I think the veil is kind of being pulled back on some of that, with people being discovered who the wallet holders are and
Yeah.
that kind of thing.
Mhm.
But in general, I think that's, it's more of a um, fly by the seat of your pants kind
Yeah.
of
Yeah.
individual, that started in the early days of that. So, but there are similarities to gold for sure. It's just, with the finite
Mhm.
resource and the limited number of coins that'll ever be
Yeah.
mined. But I think that there are more differences than
Mhm.
similarities for sure.
And Keith, some
Yeah.
last thoughts about Bitcoin versus gold?
No, well
both,
said.
or-
I mean, Bitcoin there's a finite Bitcoin, but doesn't mean there can't be 3,000 new different versions of Bitcoin, right?
Mhm.
And some other,
Aren't there already?
yeah, I know. So I mean,
Litecoin, Ethereum,
Fart coin.
Fart coin.
Lisa, come on now.
Mhm.
Yeah, so that's the only thing that kind of, obviously Bitcoin being the leader and the biggest, I think that's fairly safe. But I think as you go down the laundry list of them,
Yeah. Yeah.
I'd be very careful.
Yeah.
Because
Exactly. There's a
they-
lot of stuff going on.
they're not backed
and
by anything.
yeah.
Like gold is
Mhm.
gold,
Yeah,
right? So
yeah.
that's got a physical
Yeah,
backing,
yeah.
whereas these
Yeah.
other ones
So we're talking
potentially
about
don't.
crypto, kind of that those are the big boys
Mhm.
like Bitcoin, Ethereum,
Yep.
and
It's kind of
all
funny though,
them.
because
And
like originally, like 10 years ago, people were like buying Domino's pizzas with Bitcoins.
Yeah, I heard about it.
that would be a
And-
couple of $1 million today.
Right,
for
right,
Domino's
right.
Pizza,
But
right?
but it's
Yeah.
kind of funny though, because people don't spend Bitcoin like when you go to websites,
Yeah.
like you're not checking out
Yeah.
with Bitcoins.
No.
Like, but
Which
you
is
used to be able
interesting.
to.
Yeah, which is
Yeah.
interesting,
So-
but no one does anymore.
Right.
The kind of the Bitcoin ATM machines or whatever.
Right.
No one really.
Not a
But-
currency
yeah.
anymore.
Yeah.
Right. Yeah, it's not actually doing what it was originally designed to do.
It's a good point. It's more into an investment rather than a currency that kind of takes over the
Right.
other currencies.
I did hear on a different podcast that someone literally back in the day bought like 2 Domino's pizzas for
Yeah.
a Bitcoin or
Oh,
something. Could
that's
you
too bad.
imagine? Oof.
Oh, yeah.
That's a tough
Hindsight.
one.
Yeah, it's a tough one. Yeah. Yeah. Anyway, that guy probably feels the same like the guy who lost the password to $50
Pretty
million.
well, yeah, maybe not as bad.
Maybe
as that
not
guy.
as bad, but similar
Mhm.
effects. Anyways, that was it for today. So we talked a lot about the
Lisa's favorite subject.
about me, one of my favorite subjects. Yeah. Anyways, if you like it, like and subscribe, and make sure to be back next week when we are out with another episode of the Pickers Market. Bye bye.